Get a look ahead to the U.S. trading day before the U.S. gets to U.S. Squawk Box. Daniel Frishberg, Chief Investment Strategist at Laffer Frishberg at the CME. Thanks for joining us. First and foremost, how do you characterize yesterday's rally?
Well, it was fabulous, but it was one day, and we've been having a lot of those. You should remember that there has never been a rally on the Dow of more than 300 points in an actual bull market. These gigantic moves have only taken place in bear markets since 1995. So it isn't conclusive, but it was a lot of fun. I like it. I think it's very interesting right now. A lot of the futures traders for the S&P futures key off the DAX, and the DAX has got this illusion of being down because of Volkswagen. I don't think that any of these things are going to be very good cues for how we start in the morning.
Daniel, hi, it's Lisa in Singapore. Should the automakers be bailed out?
Should they be bailed out? We've got this rolling bailout, this rolling socialism, and I think that's a lot of what the stock market has been discounting is the disappearance of any kind of, we used to repair things, and we used to use the stock market as the way we allocate resources in the United States. It made a very, very vibrant economy, and the whole world copied what we did and became richer, and now that we're going the other way. We're having central planning to decide how resources should be allocated. That's not as efficient, and while we will have a big rally at some point, 20 or 25%, which it may start now, in the long run, the economies are going to discount the fact that that's much less efficient.
Well, Volkswagen, Daniel, looks as if it's doing fine. I'm joking, of course, so perhaps none of the autos need a bailout. But, of course, the Fed decision comes up fairly shortly. What are you expecting, and how will markets react to that? Because there is a danger, of course, that we've already overrun the story and we're pricing in so much cutting. How much is the Fed really going to deliver?
Well, you know, I have spoken at length with a lot of the people, chief economists, etc., at the Fed, and they don't know right now themselves. I know there's a lot of guests everywhere, ex-Fed governors, and but the guys who are actually voting don't now know what they're going to do yet, and so I would say probably a half a point is safe. But what's going to happen is the markets are going to have a knee-jerk reaction one direction, and then there are people going to rush in and fade it, and then there'll be another move. It'll be the third or fourth big move that will actually hold, probably.
Hello?
My guess is that that they will sell the fact, buy the rumor, sell the fact this time.
Will the rate cut even make a difference in any feed-through the real economy, Daniel?
Well, look, I count about $3 trillion of new money being invested into the banking system, and what they're doing is they're going to buy back bonds, they're putting more money into the banking system, and eventually all of that liquidity is going to hold. The most profitable words in the English language are the Fed is lowering interest rates and it isn't working. Eventually, it always works. And it will be a violent rally at some point.